Hello. Hey, friends. Hey, Karim.
Hey there, John.
Good to see you. Good to see everybody. We're just getting started with the latest AMA for Global X Canada. It's great to see everybody, and I love doing these. This is the first time we've had a chance to do one together, so I'm excited about that.
Yeah, same here.
You are such an all-star here at Global X, and today what we're going to be doing is kind of a version of what we've done in the past. I mean, first of all, AMAs are great for connecting with everybody who's interested in investing. That's what we are passionate about as well.
Absolutely.
And we have found at Global X Canada that the value in being live on YouTube while we're doing a live Reddit is awesome. And I am pleased to say we have some amazing questions already in the queue, so there's going to be a lot to get to today. One of the things we wanted to do this time around is to talk a little bit more about asset allocation. For those who don't know, Karim Ghalayini is the Senior Vice President of Business Development, but also at Global X, Asset Allocation ETFs has been a very fast-growing category, and this is that time of year when people are thinking a lot about investing for their future, investing for retirement. It is the season for RRSP-related contributions, and so we wanted to field questions that people might have about, investing or getting started, absolutely, but we really wanted to zero in on asset allocation ETFs because they are a really cool developing part of the ETF landscape. Wouldn't you say?
Absolutely. I mean, I think that what makes them so interesting is the fact that they can help out both people who are new to investing and very seasoned investors as well.
Yeah, and we'll talk a little bit about the various shades of asset allocation ETFs because there isn't just one. The whole point, actually, and by the way, a lot of the questions that we got today are amazing and geared around the reality that every investor takes their own approach. This is all about education. We're not providing financial advice, but we do want to get your perspective. And as we go through and stay live on YouTube and are live on Reddit, we're going to be talking a little bit about what you are curious about. We also did a poll, Karim, heading into this, which, by the way, a lot of people responded, which was amazing.
Absolutely.
Because we thought it might be sort of the table stakes for the conversation today. So we did this poll question across social media, and it is still live now, but we basically asked the question, what do you think an asset allocation ETF is, right? Yeah.
And I kind of love the answers that we got because, two of the answers as an example was one, is it a single ETF with many holdings or a portfolio in one ETF? And when you really think about it, I would say that it is both of those things. An asset allocation ETF is really single way that you can get exposure to a diversified basket of, let's say, individual ETF holdings that's going to be rebalanced and managed for you by a group of experts at the firm that you choose to choose.
I would agree with you. The fact that there's multiple ways to technically answer that question speaks to the fact that you've got newer and newer products in the ETF industry.
Yeah.
They are trying to achieve the goals that a lot of people have, which is to build a foundation of an investing portfolio that can serve you well in the long term.
Absolutely.
But I think that the fact that you have different flavors of asset allocation ETFs speaks to the fact that they're not all created equal, and that's been one of the exciting things about the fact that this as a category has been growing so much. So that's really kind of the starting points of what we're going to be doing today. We're going to be fielding your questions over the course of the hour. We are live on Reddit. We've got some great questions that have come in already. If we get more questions on the fly, we'll take those too.
Absolutely.
And we'll see where the wind takes us. That's the fun of doing these lives. But I'm going to get into the first question because why not? We said we'd be answering questions, so we might as well do that. So we have a bunch here. I'm going to start with one that we got from a Reddit user, PFC guy, and the question, Karim, was, what are you doing to guide new investors towards products that might be suitable for them as opposed to products that definitely are not? And I have to say, just like in terms of context, and it's not a financial advice dialogue today, it's more of an education series, but the reality is that the one thing I've learned covering the markets for 25 years is that every person has their own approach, and that tends to be sort of the the starting point for a lot of people is to first figure out who you are as an investor before you're even looking at possible investing options. But let me give you a chance to field this one.
Thanks, John.
Yeah.
I mean, listen, what I would say to that question is we really want to offer investors a whole gambit of solutions for everything from the conservative, balanced growth, investors that are looking for more income, some that are looking perhaps for more growth with lightly levered options, or maybe a combination of both. So, I mean, we really want to give people as many options as we can to provide them with a smooth and just a nice ride for them to be able to achieve their financial goals.
I mean, just for context on the Global X side, I mean, this has been a growing category. We said it earlier,
Absolutely.
but I believe Global X is up to 8 specific asset allocation ETFs, which is a lot of choice for people who are trying to figure out. You've got the growth theme, you got the income theme, you got the balance theme.
Yeah.
You have a blend of both.
Yeah.
The ability to, I mean, covered calls as a strategy has been very popular amongst Canadian ETF investors.
Absolutely.
So you can basically work through, especially on the Global X website, all the information which is right there on what is in the basket, so to speak, and all the ETFs. You can figure that out pretty quickly.
I think that's what's really interesting in the sense that, like, if you are a more conservative investor, we do have options for those people that have more, let's say, fixed income, which should give you a more smooth ride over the long term. If you do want a more growthy exposure, you have the full equity options, lightly levered options, as you kind of touched on, covered calls being something that's been really big in the market because we've seen that, I mean, a lot of the population are nearing retirement, getting a little bit older, so that generation of income is something that speaks to a lot of people, and to be able to really give that to people without necessarily having to have them write their own options, which could be really challenging for a lot of people to do. I'm in the business and I wouldn't necessarily feel very comfortable doing that myself. So to be able to allow a company to do that for you and manage it in that way while you're basically staying invested, reaping the benefits of the additional income or the long-term growth, depending on what your goal is a nice added value.
It's an amazing chapter in the history of investing in that, you know, there are so many do-it-yourself investors now, and they can very quickly get onboarded into the world of investing, and they can, sure, absolutely, pick individual names or individual stocks. But I think the reality is, especially on the ETF side, and I know it's true here at Global X, everybody is watching and embracing that trend as well to make sure that you've got publicly traded, easy to access funds that meet those similar long-term needs, again, depending on who the individual is. So that's a great question to kick things off, which is that there is a range of different ETFs, all available on the Global X website, and hopefully people have a chance to check those out as we move through RRSP season. We have another question here. This one I really like. It's, are asset allocation ETFs meant for long-term investing, or can they work for shorter-term goals too? Because it gave us a chance to pause for a second and think, that's a great question.
It really is, absolutely. And I mean, for the answer to this question, what I would say is your time horizon is something that you really need to take into consideration. Not only your time horizon, your appetite towards risk. I would say those are probably the two first things that you'd want to think about before kind of jumping in with an investment into these products. Obviously, if you're working with a shorter time horizon, you might want to consider one of the products within the lineup that has a little bit more fixed income versus something that would be a full equity exposure. Usually the full equity exposure, that would come with more risk, right?
Yeah.
There's no free lunch. So in a sense that you would get the opportunity to make more money in that type of a product. But usually you'd want a bit of a longer time horizon for something like that. So what I would say is, if your horizon is a little bit shorter, you would potentially want to look to something that would have a little bit more fixed income in it. As an example, just since you don't necessarily have as much time if the product does, let's say, go down with the markets, which could happen, to kind of make up those gains that you would have lost, or that money that would have gone down.
Absolutely. And again, this isn't financial advice. I think what I really liked about that question is that we started by talking about how in 2026 there are all these different funds that allow you to think about your long-term objectives in a relatively efficient way as an investor.
Yes.
Which means that if you want to jump the queue of being like, I'm going to be investing in these stocks, possibly these income-based products, figuring out the cash mix, all those different things, that you're able to do that with the ETFs, and sort of it logically takes you to the idea of, oh, okay, well, these are meant for people who are thinking about the long term. Yeah. But if the ability for somebody to identify what kind of investor they are, which is always one of the first things people have to think about,
yes.
Coupled with the fact that these ETFs exist today, allows for someone to at least be true to who they think they are as an investor by being in this today, even if they don't necessarily think they'll be in it tomorrow or in a week's time or a month's time. Again, it seems like a good challenge to sort of work through. Yeah. And speaks to how things have evolved in the industry.
I mean, I kind of tend to think of, like, when I saw you, like, on the street and you were interviewing people about investing, and you were kind of asking them, like, have you started, like, what are kind of like the barriers to entry, so to speak?
Yes.
Investing is not necessarily something that's easy. I think a lot about, like, my friends and even family members that I have who are not in the business. And I mean, it's very daunting in terms of what stocks am I going to pick? Where am I going to invest in terms of, like, a geography or an asset mix split? How do I even go about making the first investment? How does the stock market work? How do I punch in the trades?
Yeah.
It can be very complicated. So I think that the growth of the asset allocation, space, has really come from the fact that we want to take all of that and make it as simple as possible for your everyday investor, but not only for somebody that doesn't have a lot of experience. Like, I tend to think of my own portfolio. The core of my holdings are invested in an asset allocation ETF, just because I don't necessarily want to be looking at the markets every day, trading in and out, having to do reading on companies and stocks. It's just a much easier way to manage your money by allocating to a type of product like this. And when you look at the investors that have had the most success over the long term, it's been people that have kind of taken the approach of, they determine their asset allocation, they determine their risk and their investment horizon, and they kind of set it and forget it, right? Yeah. I don't know if you've heard, but there was a famous story of Warren Buffett who had basically gone into a bet with a bunch of people that he knew, and it was they were going to allocate money to stock pickers, like hedge fund managers, versus Warren Buffett that decided to put money into the S&P 500. And whoever was going to have the highest return over a set period of time, the loser would have to, let's say, pay a charity. And Warren Buffett ended up winning with an index product. So when you look at it, and there's studies also that have been done by pension funds, which I find really interesting, where they've seen that 92% of people's, let's say, gains in a portfolio have been determined by asset allocation, and not necessarily by individual stock picks or sectors. So once again, I think that that's kind of like a nice inkling in terms of the growth that these types of products have had in the market.
Yeah, it's all really helpful context, Karim. I mean, there's other stories out there, like portfolios that, may have done well. This is just anecdotal stuff. This is definitely not financial advice, but, they lose the password, and that actually helps them over the long term because they're not making, seismic changes. Look, we all know in the world of investing, it lives and breathes every day. Absolutely. And that's one of the exciting things. And for some people, certainly they embrace that. But to your point, other people, and I'm glad you brought up those experiences we had hitting the streets with Global X and just talking to people, because sure, some people are familiar with some well-known stocks and things like that, but most people are thinking about it more just in terms of who they are. They're thinking about it in terms of, oh yeah, I really want to do that. I haven't gotten around to. It's all these personal things about life that come into the mix, and that is very real. That is the reality. So what are the barriers to just getting started? Because that, on social media, that's probably the most common question that I get too from people who are sort of inbounding and inquiring. It's like, how do I get started? Everybody is interested in conceptually what money and investing can represent.
Yes.
And we now live kind of in an era where some of the barriers have come down, and that part is exciting. Anyway, I want to keep going through some of the questions as well, and I know you've got some other comments that you can share. And thanks, by the way, everybody, for the great questions so far. We are live on YouTube. We're live on Reddit. We're fielding your questions. You can still participate in the poll if you want. A lot of great stuff. Now, the question from another Reddit user, Typical Fix 8569, it's kind of like a forecasting question. If you could pick only one metal for 2026, gold, silver, or copper, which one would you choose? I will say first off, this is an educational live that we are doing with Karim today, and we're just talking about the process of investing, asset allocation, some of the asset allocation ETFs at Global X. But hey, people want to know what's happening and where things are going to go. So that's where this question comes from.
I mean, obviously, it was a huge year last year for precious metals. I mean, we're seeing gold, silver, all-time highs. What I would say is that we do have incredible insights on the website, precious metals, commodity trackers. So you can go ahead and get a lot of information from our analysts about these kinds of metals if you're looking to allocate to that now. One interesting part, because I do talk with financial advisors quite a bit, is the fact that if you did want to invest going forward, you could potentially look at the producers. What I mean by that is we've got a couple of products like a gold producers or a copper producers. The producers, the companies behind it, haven't necessarily had the same types of run-ups as the metals have, right? They're not necessarily at all-time highs in terms of valuation standpoint. So that could be potentially an entry to play. Now, at the same time, I truthfully probably would be on a private island somewhere if I knew the answer to that question. But I would probably divert to our analysts and the information that you guys could find on the website with regard to those.
Makes a lot of sense, and the Global X team put a lot of work into kind of some of their 2026 things to watch, and there is a lot to think about. I mean, what are some of these factors that have been driving gold higher, you know? There's more than one answer to that, just as there is when it comes to copper or silver, which has been reaching all-time highs. I think another reality is the one thing you learn watching the markets day in, day out for a long time is you never quite know. And it's nice to have sort of people who are making projections on what might be the hottest investment this year or that year. But there's just so many things that happen that will influence the market. We were talking before we started this live about how, you know, because of geopolitical considerations that cropped up very early in 2026, that all of a sudden, you know, everybody was looking at energy again.
Yeah.
And I'm glad you mentioned the insights section for Global X, because the concept of a commodity super cycle. So let's sort of shift away from, you know, which metal is poised for the best performance. Just the idea of whether or not we're in a commodity super cycle, it's an important question to explore.
Absolutely.
And it's actually running in parallel with one of the other big themes that especially growth investors are interested in, like the AI story, right? And what is powering the AI economy. Anyway, it's a pretty electric time in the markets right now.
It is.
So there's a lot to watch. But again, this is just some perspectives, right? And more for educational purposes.
Yeah, absolutely. I mean, this isn't financial advice that we're providing. We really just want to kind of make sure to touch on these questions. And I mean, one thing, if I had to bring that back to our asset allocation ETFs, is that, I mean, from a rebalancing standpoint, it is kind of difficult to kind of determine when it is you want to rebalance. I mean, if you were invested in gold and silver last year, as an example, when do you kind of get out of that stuff? You know what I mean? It's not easy to kind of pull the trigger on that kind of stuff. So the asset allocation kind of lineup takes that guesswork out of it, in a sense that in January and in July, these types of products are rebalanced for you by the head office and by the firm, which kind of takes the guesswork kind of out of it for you guys as well.
That was something I was actually going to ask you about, is what's happening within those individual asset allocation ETFs. We mentioned off the top there are 8 at Global X these days, HEQT, HBAL, HCON, HGRW, HEQL, GRCC, just to name a few. And there's actually a great tool you can use on the website if you want to just search for asset allocation. Some of those are growth, some of those are income. But you're saying there's a rebalancing process that feeds into whatever that core goal of the investor is, so that you can think a little bit less about, what's moving up at this point in time or that point in time.
Absolutely. I mean, what's important about the rebalancing is, obviously, if you were to pick, let's say, a balanced ETF as an example, you'd have your assets split 50% equities, 50% fixed income. So when the markets would tend to run, one, you want to rebalance back towards those types of bandwidths that you would have invested in. But two, also from like a geography standpoint, if perspectives, as an example, are better now in Canada than the US, you want that. You want your product to kind of reflect that, right? So to have analysts and a team, a robust team that are doing the research for you, making those kind of changes, I think is very important. And you touched on it. The Fund Finder tool on the website is really an excellent tool that you can use to kind of help guide you to that. And I would really encourage everybody that's tuning in today to subscribe really to our website. You can get a lot of great insights that are provided by our firm to you guys. And I think the more information you have, the better.
And subscribe here on YouTube as well. Great videos, including those featuring you. And there's a newsletter that Global X does as well. There's a lot of, we get through the AMA link. By the way, if you've been kind of toggling back and forth between Reddit and YouTube, that's awesome too. If you want to see what things are like on Reddit, we have the URL on our YouTube live. By the way, we have way more great questions coming, and we're going to get to them. But I do have a bit of a follow on the asset allocation ETF. So you talked about how often there's a rebalancing process, but maybe I'm jumping ahead too quickly. The process of how these get built to begin with. Is there anything you can tell people about that? Because I think they're getting a sample of what might be in these asset allocation ETFs, but what was sort of the overall process that went into building them in the first place?
So that's a great question. So we have our investment committee team and our analysts over here basically at Global X head office that will basically do deep dives into the markets and kind of see the best allocations in terms of what we believe, obviously, to be optimal for clients. And the beauty of these types of products is that you are investing with the biggest underlying indexes. What I would say is that when you decide to use passive indexes, it's very important for you to do business with the biggest index providers that you can get. In terms of, I'll give you an example, like our HEQT, which is our all equity ETF. You're getting exposure to the TSX 60, the S&P 500, the NASDAQ 100, the Russell 2000, MSCI International, MSCI Emerging Markets. These are the biggest global indexes that you can get. And then to kind of have the backing of the analysts and the investment committee team to help make the decisions in terms of the percentages of where they want to allocate to give you the optimal portfolio. That's kind of like really the background a little bit.
That's really helpful. Yeah. So an all equity asset allocation for Global X, yes, there's exposure sizably to equities, but not just one index or one kind of equity.
That's correct. You're really getting a globally diversified basket. It helps to reduce the risk. Obviously, you want to be diversified. But at the same time, not only the equities, but even if you want income, which is unique to Global X, we're the only provider that offers asset allocation ETFs with a covered call overlay. Right? So if income is something that's very important to you, to be able to get that all managed for you in an all-in-one simple solution that you can set and forget, or if growth is important to you and you want perhaps a lightly leveraged exposure in an asset allocation product where you wouldn't necessarily have to open a margin account and do that yourself, or even a combination of both. These are kind of things that make us stand out from the other providers on the street.
At least when it comes to covered calls in the asset allocation ETF bucket, EQCL, EQCC would be a couple people could check out if they were going to the website, just to see what the flavor is there. I'm going to go back to some of our questions because we have tons, and I really want to. We're live with you, so we can answer the questions. So, and we appreciate all of them. We got one here. I think this is our fourth question from a Reddit user. which kind of builds on what we were already talking about. How do you think the rise of ETF investing has changed the financial landscape in Canada, with many big banks now offering commission-free ETF trading, or mutual funds and other traditional investments now obsolete to the average investor? Again, it's a good unlock because, you know, at Global X, you guys are very busy. You're introducing a lot of products tied to what you see market demand for. But fee structure is very important. Now, we should probably remind people the mutual fund industry is still very big in this country.
Absolutely.
But the growth in the ETF market perhaps reflects the fact that investors and their needs have been shifting. How would you answer that question?
I mean, to your point, I don't think that mutual funds are dead. That is not like, there are a lot of assets that are still in mutual funds. What I would say is that I believe that the ETF is just a better investment vehicle in a sense that you usually find lower fees associated to ETFs, and fees are a very important part of what make up your returns. It's something that's coming up more and more now, how much you're paying for what you're getting. So I mean, one, I would say the fees on ETFs are probably lower than a lot of the mutual funds. Two, the transparency that you get within an ETF versus a mutual fund, it's a lot more transparent. And lastly, and one of the really big points, is the intraday trading ability of an ETF vehicle versus a mutual fund that only trades at close, right? So it gives you more flexibility as an investor. I just think that it's a better vehicle going forward, in my opinion.
All right. I'm going to keep going with the questions because they've been great. We have another one. This comes from Craig Hoxton. As we go through these questions, a reminder, this is a education video and Reddit live. This is not financial advice, but it's a great opportunity to talk about really important investing questions with a lot of people making decisions right now for the short and long term, because it's RRSP season, so it's a big season. So if people want more insight and analysis even beyond today, thank you for being here. Make sure to subscribe to Global X. Anyway, Craig's question: for a hypothetical portfolio, would just one asset allocation cover your needs, or more than one and something else? Are these suitable for more experienced investors or those nearing retirement? It's got some of the flavor of what we've already talked about, but it actually is very direct in what it's asking, which is, can you buy one that represents all of your needs? And I guess I will default to you on how you would answer that one.
Yeah, I mean, I would say yes. I mean, once you've determined what your investment horizon is and really what your goals are, whether that be income or growth, I would say that one portfolio can kind of be the end all, like, I mean, the total, let's say, core, let's say, of your investment, right? Now, are these suitable for more experienced investors? I would say 100%. As I kind of touched on, I mean, me being in the business and using one of these products as the core of my portfolio, I would say that 100%. Obviously, for new investors, this is a great first step for them to get into investing, because the most important thing is to start. Right?
Yeah.
That really is, you want your money working for you. You work hard for your money, and to be able to have your money working for you towards your financial independence is something that everybody should be looking into. But even for very experienced investors, I mean, I would say that 100% this could be the nice core building block of your portfolio. And even for those nearing retirement, we touched on the covered call space. If income is your primary driver, this is an incredible way for you to be able to generate that income with a diversified basket of ETFs.
I mean, you guys wouldn't be offering the ETFs if the demand hadn't been there.
100%.
And so you sort of see that in some of the fund flows. And again, this is not financial advice. Certainly, if people want to own multiple asset allocation ETFs, because it's a growing category, there's nothing standing in the way of that happening.
Absolutely.
I will just say anecdotally, you know, in my own investing career, what sometimes does happen is, you know, you see that or this, and things, you know, catch your attention, and then you look back over time and you see what's in the bag, and you sort of try to piece it all together, like, why did I get into this and how did it? And so inevitably, you are going to have to try to answer that question of, like, what is your diversification, or what is the split in your investing? You don't have to technically, but it would be nice to be able to answer that question at the ready. And I think that, if there were more products like this when I was starting out as investing, it would have felt a lot easier from day one to be thinking actually about how you serve yourself.
Yeah.
You know what I mean?
100%.
Okay, well, we had a few questions we knew in advance because some people had submitted some questions. I think we're getting some live questions now. In the room, the team has been gathering questions. Do we have anything else live in the room right now?
Is owning one asset allocation ETF really different from building my own portfolio of ETFs? Still trying to figure out what my approach should be.
Okay. Also, an amazing question. It's a great question. Thank you very much for asking. Okay, so and this, I would imagine this comes up too if you're sort of educating people on the asset allocation ETFs, the difference between buying one and figuring out yourself and doing that through owning different stocks and different assets.
I mean, what I would say is that the approach of an asset allocation ETF, it just makes it a lot more simple. It's a great, listen, when I started investing, I basically thought that I would be able to pick individual ETFs, build my own kind of basket, and go about it that way, right? I try to find the top performing products, if I was going with actively managed, whether it be mutual funds or whatever it was at the time, and that I would be able to build a good basket of products. What ends up happening with that, though, is that it's not easy to rebalance those kinds of things. When you have a lot of actively managed stuff, they'll be invested in Canada, in the US. It's not very easy to decide when you want to pull money out of something and reallocate and keep up with the news and everything that's going on. So what I would say is that these types of products just take a lot of the complicated thinking kind of out of it, right? Simple is best for a lot of investors. And once again, this isn't financial advice, but I think that if you guys are looking for long-term investing, to have something like this, instead of having to really manage that yourself, I would say that this approach is probably nice. I mean, you can always also, John, just to add, you can always use one of these strategies as the core building blocks. And if there are certain themes or sectors that you want to explore on this as like an addition, right? Like you want to have your core and your satellite, let's say, exposure. That's something that you can absolutely do. But at least the core of your portfolio, you're investing in these big indexes that are going to be rebalanced for you. I mean, when you buy one of these asset allocation products, you're getting over thousands of companies that you're investing in, big companies around the world. I would say that's probably the way I would go.
And that's helpful. And this is not financial advice, but I mean, as you know, I'm a champion of financial literacy, and I love just us being able to talk about this, because I think that is in the same way that you figure out how you can start investing, just being curious about it. That's a great stage to be at.
Absolutely.
And while I don't know every reason why Canadians might own an asset allocation ETF at Global X, I do know that it would not be surprising if someone owns a stock, or they've been very curious in a particular equity or investment while they are simultaneously interested in an asset allocation product. Absolutely. Because that's what it means to be thinking about investing. You're thinking about who you are as an investor and where you want to be long term. But you also might be very curious about what's happening day to day, and there might be, different, pools of capital you work. If you're lucky enough to be a successful investor and have that luxury, sometimes that's what people do. They have, that portion of money that's allocated here, and then the other to the asset allocation ETF or what have you. This is not financial advice, though, but these questions have been fantastic. And actually, we're going to get to another one here, which is from Conscious Will 8201, who says, if I only have a few $100s to start, what should I focus on first, and what mistakes should I avoid? And I do think that I will say a lot of people, on social media will ask me, where should I invest? And, I'm going to let you answer this without it being financial advice to start. But I do think that the thing that I have constantly said to people is like, well, who are you? Like, what are you trying to achieve? Start by kind of looking in the mirror before turning to somebody else to sort of, figure that part out. But what's your take?
I would say that we touched on it a little bit. So I would say the first thing would be really for you to determine what your risk profile is. Once you've done that, you need to determine your time horizon. With those two things determined, you'll be able to have a better gauge of what kind of product best kind of suits your needs, right? I mean, you don't want to be investing, as an example, in a full equity portfolio if you don't have a risk appetite, right? So that's one thing that I would say. The most important thing that I would say also in terms of where to start is you just really have to get started. This is like the number one thing, and the biggest mistake that you should avoid is really, I mean, and this is funny, there's an anecdote about this portfolio manager by the name of Peter Lynch who managed a fund called the Magellan Fund. He had around, don't maybe quote me on the exact numbers, but he had around an annualized return of around 50 to 60% that he was able to generate for clients. But when he retired, he wanted to look at how much money he actually made for the unit holders. And what he actually saw was that the average client that invested in his fund only made 6%. The reason for that is because people would tend to look at their investment and sell and panic sell at the worst possible times, right? So what I would say in terms of biggest mistakes to avoid is once you've invested, if the market does go down, don't panic. You have your time horizon, right? Which is why it's such an important step. Really do not let your emotions take away from the plan that you've set up for yourself. That would kind of be my biggest advice.
All right, and it's good to get it. And again, this isn't financial advice. I'll tell you a couple anecdotal stories about me as well, because when people ask about mistakes to avoid, which came up in this question, and the previous one, like what strategies to use to determine the best time to make a change. Life is life. Life comes at you. Life has a lot of change. And I'll give you an example. You know, I tried to start early as an investor. And then I was entering that stage in my life where I wanted to, you know, buy a place to live. Now that just so happened to be taking place when the great financial crisis was upon us. And you're kind of making this real-time decision of, well, I think I need some of that capital from the stock market to make my investment in a home. And do I sell now when I'm already down this amount? That was a situation where I suppose in retrospect, it might have been a mistake to sell because we had a rough time in the stock market, as some people remember, and then we had a remarkable recovery. But there was a life decision that required money that I had to make as well. And all this is to say that, like, you could be a passionate growth investor. That doesn't mean that the off-ramp is only, you know, when you're ready to retire. There's going to be moments throughout your life, aka your investing career, where things have to change. And again, I will reiterate, this is not financial advice. That's just a little story about me and my own navigation through. But I really appreciate all that you're saying there. I think we have another live question coming in. Team's going to share with us now.
Can you take advantage of things like gold, silver, oil, gas, AI, Bitcoin, and an ETF? Do you need different ETFs to capture the various sectors, or is there an all-in-one product?
Okay, so a great question, kind of covering a lot of the hot spots of the industry right now.
Absolutely, yeah.
Gold's been at all-time highs, silver's been at all-time highs, but you've got the AI revolution powering certain companies, in particular from Silicon Valley, to record valuations. There's a lot of eye candy for investors right now. How would you answer that question about how you can use ETFs to invest in those? Do you have to go all over the map? Can you do it all in one?
Yeah, I mean, there's different ways that you could look at it. I mean, listen, you can either go the route of a managed product. There are a lot in the industry, precious metals products, products that do include artificial intelligence, blockchain, Bitcoin, or you could go the route of kind of doing it yourself and kind of splitting up your money in different themes. Obviously, this is not financial advice, guys, but you can kind of look to take, let's say, your assets, either decide to put it in an all-in-one product that's going to be managed for you, or to kind of divvy it up into individual ticker names. As long as you have the core of your money invested in what I believe to be, let's say, these asset allocation products, the biggest companies. I mean, when you think of one of the most successful investors ever, Warren Buffett, right? I mean, he made his fortune on buying big companies and holding them. And that's what you can do with these types of asset allocation products. And then if you did want to explore some of those themes, whether it be Bitcoin, precious metals, or whatever it is on the side, you can make that decision yourself in terms of whether you want to go individual or a managed product as well.
And again, not financial advice, but staying with your theme on Warren Buffett, because you were alluding to it earlier, like if it seemed like the most common answer he would give to, if I was just going to start out and invest, he would sort of recommend index-based investing. Absolutely. You already, at least in the context of asset allocation, which is one of the themes we wanted to talk about today, like as an example, the all-equity asset allocation ETF that you spoke about at Global X, it's investing in different equity indices.
Yes.
And I only bring that up because, the question was about, a few hot areas that are benefiting different markets in different ways.
Yes.
Like as we sit here in 2026, yes, we've seen a lot of interest in US equities, but we've seen record levels for the Canadian stock market as well. And that is in part because of the interest in metals and metals-related companies. Now you're getting that additional lift from energy, which we were talking about earlier. There's the power component of the AI boom, and there are some Canadian companies that are at the center of that as well. So you can ask that same question through, different markets, like not necessarily sectors, but like the Canadian market versus the US market, and you can get that in ETFs as well. So a lot of food for thought there.
Yeah.
All right, we're going to keep going. We have some great questions. We're going to get to another one here for Karim, which is really kind of about the landscape of these all-in one products.
Yeah.
What's the difference between Global X funds and some of the other players out there? What makes them unique at Global X?
Yeah, so I mean, what makes us unique at Global X is twofold. One, which I've kind of touched on, we are the only provider that kind of offers these asset allocation products with a covered call overlay, with a lightly levered overlay, and with a combination of both a covered call and a lightly levered, right, asset allocation product. So that makes us quite unique. In terms of the question that was asked, I mean, there are a lot of obviously providers in Canada that do offer asset allocation products, right? If I had to pick two as an example off the top of my head, I mean, Vanguard, they offer also a big lineup of products, minus the covered call overlay and the lightly levered, as I kind of touched on. One of the big differences that I would say with us and them is, from the portfolios that I've seen, is they kind of have a little bit more of a home bias. They have an allocation that's slightly higher towards Canada than we do. We're a bit more diversified internationally than they are. That's like one of the major differences from an asset allocation standpoint.
Okay.
Fidelity is another one that I come up against quite a bit. And with respect to that, they have a Bitcoin allocation, which has served them well in the past. That is something that I've kind of seen go the other way right now, just between us and our listeners. And I mean, the fees is also another thing. I would say that you got to be mindful of the fees that you're kind of looking at when you do look at these types of products. And I would say some of our competitors do have slightly higher fees on some of their stuff.
Okay, yeah, you gotta look at all those considerations, and we appreciate the questions. And we're starting to wind down in terms of some of the questions we have. By the way, just in terms of the uniqueness of the Global X ETFs, I wouldn't mind spending just like a really quick bit here. You talked about light leverage, and we've talked a lot about covered calls. In the most simplistic sort of way of understanding that stuff, covered calls essentially helps to bring you into the options market in a way that generates some income, maybe caps a bit of the potential upside, but brings you the income. The light leverage is more about, maybe you can sort of explain that part really quickly to people.
Yeah, sure. It's about basically for every dollar that you invest, we would invest over, right? So let's say 25 cents as an example. And so that would basically amplify your returns. Also at the same time, let's be very mindful to know that if things go the other way, it would also amplify kind of the losses on that. But definitely a unique approach to the asset allocation kind of suite.
Okay. I'm going to get to one more question here, and this one was earlier in just the flow of questions that we got, but I thought it was a really good one. How can I manage risk in my portfolio if one of my goals is to buy a house in the next 5 to 7 years? And what I liked about that is it's sort of in between short term and long term.
Yeah.
And I think it's a very, I told you about my own experience of, I've tried to be a hardworking investor and building, a portfolio, and then life decisions come your way. So, 5 to 7 years, looking out, trying to both create a base of capital that you can use towards that, but also wanting to, I'm kind of making some assumptions here on the question, but wanting to ensure that while you want your portfolio to grow, you want to make sure the money is also there to make that purchase in 5 to 7 years. So what would be, it's not financial advice, but what would be some things to think about, do you think, with that?
I mean, I think that one, as you guys can see from the question, I mean, it's great that you've determined your time horizon. That is one of the most important things that we've mentioned a couple of times now during our discussion, obviously. So what I would say in terms of managing the risk, if your goal is to buy a house in the next 5 to 7 years, I would potentially look to more of a portfolio that had higher allocation to fixed income, right? Now, obviously, that will go with your risk tolerance as well, but usually portfolios that have higher allocations to fixed income, bonds will usually provide a smoother ride overall in a portfolio. So that's what I would probably say to answer that.
All right, well, some good food for thought there, and not financial advice. I mean, this has been great. I think if we went back to our poll question, which we started this whole AMA with, where we had, a good chunk of people answering one way, I'm sure they would feel more informed at this point in how they answer. But this has been a lot of fun, Karim. And I find every time we do one of these, we not only get a chance to talk about our favorite subject, we get a really good glimpse into what people are thinking about. Especially like right now, it's RRSP season. People are trying to figure out, where they could make investments, and so this has been awesome. I hope you've had a good time too.
Yeah, I had a great time, and I mean, listen, it's a lot of fun getting to hear your questions and taking that time to answer them. What I would really want to mention again is take the time to subscribe to the website. You guys can get a ton of good information, and really that will help you make better informed decisions.
I was going to say that too. Like we had that question earlier where, somebody wanted to know about every, hot area, and especially in the insights section, which you talked about earlier, there's some great stuff there. And by the way, here on YouTube, we're doing great videos all the time too, so people should subscribe to the Global X YouTube channel. I got a question about my dancing that I do on my own channels as well. We just love to find any way to capture people's attention on our favorite subject of money and investing. So maybe, just maybe in the future, Karim, you might join me. I know you have it in you to join me for some kind of dancing video or something along those ways. See, I'm going to hold them to it. Well, thanks very much for joining us for our latest AMA for Global X Canada. I'm Jon Erlichman, Karim Ghalayini joining us, and please make sure to go and check out the Reddit AMA as well if you want to go back and review some of this material. And if we haven't gotten to your question or answered it yet, our team will be hard at work to make sure you get those too. And happy trading. We'll see you again soon.